Hello students, in present video I am going to explain about 17th problem from consignment accounts topic. I am making this video for degree students. Previous videos links are available in the description box. Let us see the question first. Mohan consigned lipsticks of 400 packets each containing 100 lipsticks to Ravi on consignment basis. Cost of each packet was 300 rupees. Mohan spent 50 per packet as expenses. 2 packets were damaged on the way and Mohan lodged a claim with the insurance company and could get 300 rupees as claim on average basis. Ravi spent 5000 rupees as non-recurring expenses and 3000 rupees as recurring expenses. He sold 370 packets at the rate of 6 rupee 50 paisa per lipstick. Ravi incurred expenses amounting to 200 rupees for repairing the damaged packets. He sold damaged packets at 250 rupees. He is entitled to 10% commission on sales except the sale of damaged goods. Show consignment account. This is the question. Let us see the solution for this. Important points of this problem I have written on the board. Mohan and Ravi are in consignment business. Mohan is consignor, Ravi is consignee. Mohan sent lipsticks of 400 packets on consignment basis to Ravi. So each packet contains 100 lipsticks and cost of one packet is 300 rupees. His expenditure 50 rupees per packet. Then while transit 2 packets were damaged. He has not given the reason. So this is abnormal loss or normal loss. Observe, product is lipstick. If it is cement, if it is any liquid, then due to evaporation, due to dust, so some quantity may be lost. It is considered as normal loss. But here, product is lipstick, no? So due to its inherent qualities, there is no chance of loss. Therefore, this 2 packets loss is treated as abnormal loss. So in 16th problem also I explained about abnormal loss. The difference is in 16th problem those goods were not insured. But here consignor has taken insurance policy on these goods. So goods are damaged, then consignor lodged a claim with the insurance company. And insurance company paid 300 rupees as compensation on this 2 packets loss. Then consignee received the remaining packets. How many? 400 minus 2, 398 packets are received by consignee. Consignee sold 370 packets. One lipstick he sold at the rate of 6 rupee 50 paisa. So this is a one lipstick sale price, not a one packet sale price. Be clear with this point. Next, his expenditure is non-recurring expenditure 5000, recurring expenditure 3000. So non-recurring expenditure means direct expenditure. Recurring expenditure means indirect expenditure. And 2 packets are lost, no? So consignee spent 200 rupees to repair these goods. Next, he sold these 2 packets for 250 rupees. His commission is 10% on sale. But while calculating commission, damaged goods are sold for 250 rupees now. On these 250 rupees, we should not calculate commission. Only on sales amount, consignee is entitled to take this commission. So this is the question. And what is asking us to prepare? In consignor's books, consignment account he is asking. So here the new point is abnormal loss we have and these goods are insured. So ledger of Mohan in brackets consignor. Consignee's area's name is not given. Therefore, only consignment account I wrote. So consignment account is a nominal account now. Debit side, consignment business related expenses and losses we should show. Credit side, consignment business related incomes and gains we should show. Think from consignor's point of view. Because in his books we are preparing this account. First what happened? Consignor sent goods on consignment basis. Entry, consignment account at R2, goods sent on consignment account. So in consignment account debit side we should post 2 goods sent on consignment account. In bracket, show the calculation. 400 packets are sent. One packet cost price is 300 rupees. 400 into 300, 1,20,000. Next, for consignor expenditure, on one packet 50 rupees. So expenditure in consignment account debit side we should write now. And for consignor's expenses, we have to write to bank account. In bracket, show the calculation. 400 packets are sent. On each packet, expenditure is 50. So on 400 packets, 400 into 50, 20,000 rupees. This damaged goods information at the end we will write. Consignee sold the goods now. Sale is an income to consignment business. So income's credit side we have to show. For sales, consignee's name we should write. Consignee's name is Ravi now. By Ravi account. Clearly show the calculation. How many packets are sold? 400. One packet contains how many lipsticks? 100. One lipstick is sold for 6 rupee 50 paisa. If you multiply this, 2,40,500 rupees. Then, consignee's expenditure. So in consignment account debit side we should show now. For consignee's expenditure, his name we have to write. To Ravi account. Non-recurring expenditure 5,000 plus recurring expenditure 3,000. And new point is damaged goods are repaired no. For that consignee incurred 200 rupees. This 200 also we should consider here. Plus 200. Total 8,200 rupees. Next. These damaged goods are sold for 250 rupees. This sale amount don't write here. So while calculating abnormal loss value, we should consider that 250 rupees, not in consignment account. Next, commission. So to consignee, we have to pay. For consignment business, this commission is an expenditure. Debit side we should write. For consignee's commission, write down his name. To Ravi account. Sales amount is 2,40,500. Damaged goods are sold for 250 rupees. But in question clearly is asking. Commission we have to calculate. While calculating the commission, we should not consider 250 rupees sale. Therefore, on this sale only we have to calculate commission. Into 10 by 100. 24,050 rupees. So everything we have written. Finally, we need two calculations. First one, 2 packets are damaged. No? This is abnormal loss. Abnormal loss value we should compute and we should take that amount in consignment account. Next one, 400 packets are sent on consignment. 2 packets are damaged. So consignee received 398 packets. He sold 370 packets. Means 398 minus 370. 28 packets are unsold. So this unsold stock value also we should calculate. So let us see the calculation of abnormal loss first. First working notes, abnormal loss value calculation. Cost of goods damaged. How many packets are damaged? 2 packets. One packet cost price is 300 rupees now. So 2 packets into 300 rupees each, 600. To this, consignor proportionate expenditure we should add. Consignor total expenditure is 50 rupees per packet. So total expenditure is not given here. Per packet expenditure is given. So 2 packets are damaged now. Therefore 2 packets into 50 rupees per packet is equal to 100 rupees. So on damaged goods, consignor direct expenditure is 100 rupees. Don't consider consignee's direct expenditure here. See, non-recurring expenditure spent by consignee 5,000 now. Non-recurring expenditure means direct expenditure only. We should not consider this value here. because I'm not calculating unsold stock value. I'm calculating abnormal loss value. If you observe, goods are lost in transit. So consignor is sending 400 packets. While sending these packets, per packet 50 rupees he incurred. Means on 400 packets he spent expenditure. But in transit only goods are lost. So consignee received 398 packets only. So whatever he spends on 398 packets only, not on 400. So on this damaged goods, 2 packets, consignor didn't incur any expenditure. That is why while calculating unsold stock value, consignee's direct expenditure we should not consider. Assume that goods are damaged in consignee's quota, not in transit. In that case, consignee incurs that expenditure on total goods, no? 400 packets, no? Then the consignee's expenditure also we should consider here. So while calculating abnormal loss value, we have to be careful. So where that loss took place, that is very important, in transit or in consignee's quota. Then we insure these goods and the consignor got 300 rupees from insurance company as claim amount. So this 300 we should subtract from 700. Then 400 rupees. And these damaged goods are sold for 250 rupees now. That also we should subtract here. Then only final loss amount comes. So 400 minus 250. For 250 what to write? Minus sale proceeds of 2 packets. Final amount is 150. So total value of goods lost 700. In that from insurance company 300 came. Deduct that. Damaged goods we sold for 250. That also you have to deduct. Final amount is loss to consignor. So this amount is treated as abnormal loss. So this is a 250 rupees sale is there now. Here we should not consider. If damaged goods are sold, while calculating abnormal loss value, we should consider that a sales amount. And in consignment account, way to show this abnormal loss. In 16th problem also I explained. See, goods incoming debit side we show. Goods outgoing credit side we show. Abnormal loss means goods are going out. Therefore, credit side we have to show that. And actually speaking, for abnormal loss, these 2 entries we should pass. First entry is abnormal loss accounted to consignment account. Why abnormal loss account is debited? Because abnormal losses come under nominal accounts now. Nominal account rule, debit all expenses and losses, credit all incomes and gains. As this is loss, we debited abnormal loss account. Why consignment account is created? Because abnormal loss value in consignment account credit side we want to show now. If you want to post on credit side of consignment account, while writing the journal entry, consignment account should be created. Then abnormal loss account is a nominal account now. Nominal accounts are temporary accounts. So at the year end, we have to close those accounts by transferring to trading account or profit and loss account. Abnormal loss account we have to close by transferring to profit and loss account. So by debiting we created this account. If you want to close this account, you have to credit. And to P&L account we want to transfer now. So we should debit P&L account. Actually speaking, these 2 entries we should pass for abnormal loss. But not necessary. Because the end result of these 2 entries is, in first entry, abnormal loss account is debited. In second entry, abnormal loss account is credited. Then these 2 accounts will get cancelled. Then what are left? P&L account on debit side, consignment account on credit side. So final entry is profit and loss account to consignment account. Directly we can post this entry in consignment account. So when these 2 entries we should write? Suppose in question clearly he is asking us to prepare abnormal loss account. Consignment account plus abnormal loss account. If you write this entry, direct entry, then you cannot prepare abnormal loss account now. In that case, instead of this, these two entries we should pass. But in present problem, he is not asking abnormal loss account. Therefore, direct entry you can write. Some authors may follow these entries, but we follow this direct entry. And in present problem, we have a new point. That is, these goods are insured. An insurance company paid claim amount. How much? 300 rupees. If they pay in cash form, cash is coming now, so we should debit cash account. If they give a check for this amount, so we should debit bank account. My assumption is insurance company has given this money through a check. So 300 worth check came to us. What we do? We deposit this check in our bank. So our bank collects money from insurance company. It will be deposited in our account. So our bank balance is increased by 300 rupees. So bank account. Bank account is a personal account with the organization name. If you open any account, that is personal account. Personal account rule, debit the receiver, credit the giver. So our bank is a receiver. They are receiving 300 rupees. Therefore, we should debit bank account. Bank account. This is a final entry. So remember, if goods are not insured, for abnormal loss entry is profit and loss account data to consignment account. If goods are insured and if insurance company pays some claim amount, then the entry is profit and loss account data, bank account data to consignment account. How much money we received? 300. For bank, write down 300. Now to P&L account, final loss amount we should transfer. So abnormal loss value is 150 now. That amount we should write for P&L account. Total 450 rupees for consignment account. Assume that insurance company paid full amount, full loss amount. So loss amount is 450 rupees. Assume this is total money we received from insurance company. In that case, what is the journal entry? There is no loss now, so don't debit P&L account. Then the entry will be bank account data to consignment account 450. Suppose insurance company accepted to pay this 300 rupees. They are not yet paid. They have accepted to pay. In that case, insurance company becomes a debtor because from them we should receive money. So debtor means asset should be debited. Then instead of bank account, we should debit insurance company account. Then the entry will be profit and loss account data, insurance company account data to consignment account. Therefore, while writing the abnormal loss entry, we have to carefully observe all these points. First one, whether goods are insured or not. Second one, if goods are insured, partially insurance company is paying the claim or full claim is received. Next one, insurance company accepted to pay the money or they paid the money. So based on the information given in the question, we should frame the journal entry. Now in present problem, this is the entry for abnormal loss. Let us post this entry in consignment account. So consignment account is created, therefore credit side we should post. What to write? Two accounts are debited. Write down those two accounts. By profit and loss account 150 rupees. By bank account 300 rupees. So abnormal loss related entries are over. Finally, come to unsold stock value calculation. Second working note says unsold stock value calculation. Cost of unsold stock. How many goods are unsold? 28 packets. So 28 packets into one packet cost price is 300 rupees now. 300. 28 into 300 is equal 8,400. To this, we should add proportionate direct expenses of consignor and consignee. First consignor plus proportionate direct expenses of Mohan. On one packet, Mohan incurred 50 rupees expenditure. So on 28 packets, 28 into 50 rupees, 1400 plus proportionate direct expenses of Ravi, consignee. Consignee received how many packets? 400 are sent, 2 are damaged. So consignee received 398 packets. On 398 packets, he incurred non-recurring expenditure 5,000, recurring expenditure 3,000. So here non-recurring expenditure means direct expenditure. No? Direct expenditure only we should consider while calculating unsold stock value. Therefore, 5,000 only we should consider. 5,000 is spent on 398 packets. We want 28 packets value. Therefore, calculation is on 398 packets. If consignee's direct expenditure is 5,000, on 28 packets, how much? So 5,000 divided by 398 into 28 is equal 352 rupees. So consignor expenditure he is giving per packet. Therefore, calculation is easy. But in case of consignee's expenditure, per packet information is not available. On total quantity, he spent 5,000 plus 3,000 now. Therefore, in this manner, we have to calculate unsold stock related expenditure. Add these three values, 10,152. This is unsold stock value. In consignment account, unsold stock on credit side we should write now. In particulars column, by consignment stock account, 10,152. So what is the journal entry for unsold stock? Consignment stock account data to consignment account. In previous problems, clearly I explained about this entry. So again, I am not repeating that point. Then everything is completed. Finally, we have to calculate the profit or loss. Credit total minus debit total. Credit column amounts total is 2,51,102 rupees. Debit column amounts total 1,72,250 rupees. Difference 78,852. Debit side total is less. So debit side we have to write this value. What to write for this? Credit side we wrote incomes. Debit side expenditure. Income is more than expenditure. So this is profit. In consignment business, Mohan got a profit of 78,852 rupees. This amount he should transfer to his P&L account. Therefore, for this profit, in particulars column write down to profit and loss account. Two sides write down the highest value. 2,51,102 rupees. Credit side also same. So this is the end of present video. Hope this video is helpful to you. Thank you.